I'm going to use these free websites to find an ETF to buy. And at the end of this video, I'm going to invest $1,000 into that ETF. Okay, so here's what we gotta do first. We gotta narrow it down. So to me, narrowing it down means that we need to figure out a framework to understand what we're looking at first off, and then we decide where in that framework we wanna go to find a stock or an ETF actually in this case. So first off, let's understand the stock market really quick. So here's how I break this down for myself. So first off, stocks of course are what ETFs are made of. So we need to understand stocks first, and we need to understand styles. So first off, we have the style. Now this is gonna consist of large cap, mid cap, and small cap stocks. So these are the different types of styles of stocks that we can have. But this basically just means that there are larger companies, there are smaller companies, and then there are mid-sized companies. That's kind of how we structure the different companies in the stock market. There's a few other things we could do here. We could say, for example, there are large cap growth companies, right? There's also large cap value companies. So you could also have dividend stocks. So basically, it essentially looks like this, right? You could have mid cap, you could have small, you could have large. It could all be different blends of these things. You could have ETFs that invest in these different things. Now, a blend would be if you invest in all of these, for example. You don't distinguish which one you want. So for example, you might have something that looks like all of these. So it might be growth, might be value, might be dividend. They're all in there, right? Also, you could have, for example, international. Like these could all be, for example, all be in the USA. They could be international, or they could be global, or they could be emerging markets. That would be like more of like, maybe they're investing in Europe, Japan, right? Developed countries. So they could be global, they could be US based. I'm gonna look at US based today. That's what I'm looking at. What we're gonna do is, I'm gonna show you the websites that I would go through in order to find the ETF that I'm gonna end up buying. Also at the same time, I do wanna show you, because you might not want the ETF I'm gonna go with at the end of this video, just the general ETFs. If you're starting out, you're likely just gonna have like one of these ETFs. So for example, if you just want a general large cap broad ETF, is going to be probably one of the ones that you would go with. That's the Vanguard 500 index, so invest in the S&P 500. Large companies, or you might go with VTI, so that's the Vanguard Total Market Index Fund. That's gonna be all the different stocks inside the market. So that's if you're gonna get all sorts of different stocks. So we're gonna call this a blend of growth, value, dividend, anything you want to. These two are like the main ones that people usually invest in. Now let's say instead you wanted to go with like more of a dividend type. So if it was dividend only, so a big one is SCHD, that's a Charles Schwab ETF. Another one is VYM, that's another Vanguard ETF, that's a high dividend yielding ETF. So those are two different dividend potentially ETFs you could go with. So if we wanna go with large cap and more of like a growth oriented, I'm gonna go with Triple Q. So Triple Q is the NASDAQ 100. Triple QM might also be in there. So that is going to be more of this. So that's gonna be Triple Q or Triple QM. It's a very general breakdown of how we're looking at this today. So, okay, how do I find out which ETF I want? How do I find out which of these I wanna go with? So I'm gonna show you my thought process. Step one, understand my portfolio. I have a lot of money that's inside VOO, which I talked about before. Invest in the large cap S&P 500 index. So all of these different big companies are inside that. So I actually want to find something that's not inside of that. Find something that's more unique that doesn't have the stocks I'm already invested in, because I have a lot of money in that. So I want to find and carve out something else. If you're just starting out, maybe you probably want to start putting money into like a broad index fund, VOO, VTI, right? So I want to ask myself, do I want large cap? Do I want mid cap? Do I want small cap? Do I care? Do I just want all of them? So I'm going to kind of try to figure that out now. So first off, I'm here on russellinvestments.com, and I am on this thing. It's called the Asset Class Dashboard. I'm gonna go over this very quickly. I'm gonna spend a lot of time on this part, but this is showing us how these different asset classes are doing right now. Where are they historically? The blue is the typical range. The most recent price is this orange one. And then kind of the gray ones is like the range that's possibly traded in before. So what we're kind of looking for is, are there outliers? So for example, if this orange part is actually outside of this blue part, it might be too expensive. On the other hand, if it's on the left side, if it's in this gray part on the left, it might be more cheap. It's kind of what I'm looking at right now. I'm just kind of saying, okay, is there an asset class, large or mid or small companies that are actually trading, let's say, higher or lower than maybe they should be? As we could see, large cap is kind of in the upper part here. Large cap defensive is in the upper part. Large cap dynamic equity, don't worry about that. Small cap is actually lower. And this line, by the way, is the median. So if you're below the median, it means maybe you're a little cheaper than usual, and maybe there's something called reversion to the mean, where maybe these prices are going to get closer to the middle. So we can see global equity is kind of high, emerging markets is in the middle. So when I'm looking at this, I'm saying, okay, well, maybe small caps are actually a little bit cheaper than they should be right now. Maybe it's a decent opportunity to buy and hold for the long term. Maybe they're gonna be at a good price right now relative to where they maybe trade like 5-10 years down the road. So that's what I'm thinking about right now as I'm looking at this. Next thing I wanna do is I wanna take a look at your Denny research. So I'm gonna type in Russell 2000, because those are the smaller companies. Russell 2000 is the index of smaller companies in the US. And so what I'm trying to see here is, are these prices kind of normal compared to where they have been historically? What we saw before, again, I'm not gonna take a lot of time on this. This is a bit more advanced, but just so you know that this exists. Here's a chart. It's a little advanced if you don't know what PE ratios are, but think of PE ratios of helping us understand if the market is trading more expensive or cheaper. A high PE ratio, maybe the market's a bit more expensive. Maybe it's too high. Maybe it's gonna go lower. Now a low PE ratio, maybe the market's actually gonna go up more. And so maybe the market's actually cheaper. So what we do is we say, okay, well here, this is a very interesting chart. We have all the different PE ratios going back, and this is the forward PE ratio. Don't worry about that if you don't know what it is. You might get confused. Let's keep this really basic. S&P 500 red line. It's a bit higher than it's been in the past, but it's not too bad. I mean, maybe it's kind of mid-region, but you see the dips here down here in the, let's say 20 teens. It's a bit higher. Now the mega cap, the big companies, Google, Apple, Microsoft, these huge companies, way high. So this tells me, well, they're probably overpriced. The PE ratio is too high. I don't want to invest in those right now. Maybe there are going to be some issues. Maybe they're going to pull back. Now, look at the S&P 600, the small cap stocks, looking very cheap. And so this is what I'm going to base my decision on. I think that maybe the S&P 600 is cheap. I need to find basically small cap stocks. That's what I'm looking for. So I go to etfdb.com. This is the screener. This is what I have. On the left side, equity, I put small. I have blend, growth, value. I don't care what it is. I'm just looking for small cap stocks. Just look at my screen. You can see what's on here so far. These are the things that I've clicked on. I have an expense ratio at the most of 0.21%. So I don't want to spend too much money on an ETF expense. And this is what I have. The screener popped out all of these different ETFs. Now, this is free. You can use it whenever you want to. So go to etfdb.com. You can see these. Now, look at the returns on the top here. We can go to overview. We can do fund flows, all sorts of stuff. So if we take a look at the returns, maybe I'll go with the 3-year return. I'll sort this. I'll say, which has the highest 3-year return? ISCV is one. iShares, Morningstar. Small cap value ETF, VBR, the Vanguard small cap value ETF. Now I'm asking myself, do I care about value? Do I care about dividends? Do I care about growth? Not really. I just care about small companies for this particular time I'm gonna be buying an ETF. So I'm looking for things that don't say value, don't say growth. So VB, the Vanguard small cap ETF, interesting. SPSM, that's the Spider Portfolio S&P 600 small cap ETF. So another small cap fund. SCHA, that's a Charles Schwab US small cap ETF. These are all good ETFs that I know about already. Now, what I can do is I can compare them over here. So within etfdb.com, I can go over here. I can say, okay, compare two ETFs to each other. I can see the expense ratios next to each other. So actually, SPSM is cheaper than VB, which is the Vanguard one. Vanguard one's a lot bigger. It's got more money in it, but I don't really care that much about that as long as it has enough money, which it does. Up on the top, we can see the holdings. These are small cap ETFs. I don't really know much about any of these companies, right? So that's why I buy an ETF, because they're just a broad basket of different small companies here in this case. Now, I do like to look at different charting software. So next up, I'm gonna show you TradingView. I'm on tradingview.com right now, and tradingview.com is my favorite charting software. So I use this whenever I'm looking at a chart. I like this because, you can basically draw lines on it. You can do certain things if you want, if you're into technical analysis, which you might not be, but it's just a great charting software and it's free. There's a paid version. I do have an affiliate link below if you want to take a look at that, but this is free. Now, as you see, VOO, which is the general bigger broad market index, the S&P 500 index, has done much better, which is the orange one, than all of these small ones. So in the small ones, we have VOO, SPSM, we have SCHA, we have VB. They're all kind of in the same area here. They're all kind of, let's say, underperforming by quite a bit over a decent chunk of time here. Right now I'm on going back until about 2019 or 2020-ish. So we could see over that period of time, these stocks have not done as good as the S&P 500 by far. But that makes me think, does this mean it's a good time to buy these ETFs? Are they cheap? And that's kind of what I'm basing my decision on today. I have a lot of ETF. I have a lot of money in this ETF or this, VOO. I have decent money in VOO. So why do I want more money in VOO? I'm looking for something to carve out that's not similar to VOO. So far, even though these returns don't look good, I kind of like what I'm seeing because today particularly, I'm just looking for a smaller amount of money to go into something that is not that. So next up is the bonus free website. This is CharlesSchwab.com. Of course, it's a broker, but if you have CharlesSchwab.com, if you have Fidelity, if you have Vanguard, you have access to some type of ETF software research in there. So if you have Robinhood, M1 Finance, or something like that, you don't have something like this in those platforms, but the good big brokers you do. Just like what I showed you before, this has a screener in it, so I can go ahead, I could screen for stocks. I put a screen together here and it's popping out all these different small cap companies. Also, once I find some companies that I kind of like, I can compare them, and what I like here is that I can put more together. What I showed you before, this Vetify, you can only have 2 next to each other, which for me is not enough. I want to see more. So here I have 5 different companies. Potentially I have 4 in this one, but you can have up to 5 different companies that you can put inside of this thing and compare them to each other. So right now I'm looking at VB, SPSM, IWM, SCHA are the ones I have. Now I want to see how many companies are inside these. So VB has 1,450, SPSM 611, IWM 1,995, SCHA 1,751. So in Schwab, I can actually see the returns and it's in a nice chart form. So I want to see, let's say maybe the longer term return. So the highest return we have for the 10-year is VB, this one here. That's a Vanguard small cap stock ETF, and it's got almost an 8% rate of return over this 10-year time period. And then we have 7.41, 7.05. On the 3-year, it's a bit lower though for VB. So right now I'm thinking that VB looks decent. Well, let's take a look at Morningstar. So what's Morningstar say about VB? So you go to Google, you could say VB, and then you can put Morningstar. You're gonna get to this. So it's got a 4-star fund. So, okay, 4-star fund out of 5, not bad. You can see things like risk on here and things like that, but we're not gonna go into detail here, but you know, if you wanna see risk is average versus the category, return is below average versus the category. Let's go to etfrc.com. What I wanna do here is I want to see the overlap of ETFs versus the ETF I have right now. Let's say VOO, for example. So I'm going to type in Fund 1, VB, Fund 2, VOO. I find the fund overlap. There's 65 overlapping holdings. Now, if you remember, VB has a lot of stocks in it, over 1,000, like 1,200-ish stocks. So that's a very small percentage of the portfolio. By weight is only 2% of the entire portfolio. So now what I'm saying is, I'm going to get a lot of stocks in my portfolio now that I don't have. If I went out and I bought another large cap kind of fund, I would get very similar stocks probably. Not with the small cap stocks, because small caps are smaller companies. I don't have a lot of exposure to that. So that's what I want. So guess what? My screen recorder, it crapped out. So I'm re-recording this last part here. Bear with me 1 second. Okay, this may actually benefit you. It's a week later actually, so I'm gonna show you something interesting about the stock VB that I was just talking about. So I do want to show you real quick, last thing, portfoliovisualizer.com. Allows you to backtest portfolios. So if you want to see how different investments together in a portfolio would have worked, take a look historically. It's pretty interesting. If I invested $100,000, what would happen? So I have 3 portfolios, one with just VOO, S&P 500, the other with VB, small caps, and the other one with 90% VOO, 10% small caps. It's going to show me just going back historically how these 3 portfolios would have done. So the S&P 500 ETF VOO, $100,000 grew to $434,000. Just the VB ETF, the small caps, only $314,000. Again, small caps didn't do so great over the past few years. This is going back until 2011. And finally, if you had done a 90-10 split, of course, you'd have a little bit less money, not too much less. 434,000 is what it could have grown to if you just had S&P 500, 421,000 if you just had small caps. Okay, let me show you buying the ETF. So like I said, this is a week later. I'm gonna show you what I did before, and then I'm gonna show you what the return is, because it's been about a week since I did this. So what I did before, I went over here, I typed in VB as the symbol, pops up. I'm in my Charles Schwab account. For the order type, I mean, you could do, you could do a market order if you want to, pretty much. It's just gonna give you the best price that Schwab can get at the time of trading. I'm not trying to trade the stock, I'm just gonna do market order, pretty easy. Action is gonna be a buy, of course, and then the quantity, Well, it's $176 per share, so I did 5 shares. Right now, that would have been $943 total, so that's why I did 5 shares. If I did 6, it would have been over 1,000. And then I hit review order, and then I just hit the trade button. Now, I'll show you, I did make this trade. If I go into my dashboard here, the last 7 days, here you can see trade confirms. VB bot, I'll show you the PDF. Here you go, one trade, total of $924 because it was a bit more expensive before. Price was $184 when I bought it, and my return since then, it's actually down $3.23. It's now worth $884, so it's down about 4.42%. Like I said, I'm buying this, long-term buy. I don't think this is gonna do very well in the short term. Last really important thing, so if you wanna see how you can use just 3 different ETFs to build a portfolio that can potentially make you a millionaire, you're gonna wanna watch this video that's right here.